Nishant, welcome to the show.
Thanks, Chris. It's great to be here.
Thanks for coming forth. Can we just start with your background and kind of what brought you to today?
Yeah, for sure. So I built my career at Mackinaw Partners. Mackinaw is a restructuring turnaround firm. Been there for about 15 years now. And it really helped build me into who I am today.
Yeah.
Incredible experiences, industries that I never thought I'd get into, everything from funeral stationery to timeshare. And that's what's kind of made me into who I am today, which is, looking at opportunistic investing, all with an operational angle.
Yeah.
And that's taken me into investments in restaurants, timeshare, cannabis, you name it.
So how did you get into Mackinac? Because the story of kind of getting there was kind of cool.
That's a great story. So I was born and raised in Dubai, came here to go to college, went to Purdue, and fully intended on going back home and living an easy life. My last semester had the opportunity to do an internship with a local business in Indiana and took the opportunity. It was a roof and truss manufacturing business. Didn't realize at the time that I was going to be working in summer in on a factory floor, loading lumber all day. Did that, had the opportunity to come back and work full time as a financial analyst, took that opportunity. And then within 2 years, the company brought Mackinac in to help prepare them for a sale to a strategic buyer. Went through that process. I supported the Mackinac team, worked with them day in and day out. At the end of that, had the opportunity again to either stay with the acquirer or move over to Mackinac. Loved the idea of traveling back then.
Yeah.
And, I could be a consultant. I can go live in hotels and eat at nice restaurants, all of which I hate doing today. So that was the reason I joined. But ended up been there for 15 years and it's been incredible.
I love it. Before we get into that, I just want to ask a question. So you're from Dubai, which for Americans, like every time I see those like before and afters of Dubai, it's like it was nothing and now it's the biggest city in the world. Were you living through the growth of Dubai?
Yeah. When I left was in 99.
Okay.
And it was starting.
Okay.
That's when the islands were starting to being built. The Pamos was being built. So we had seen that build up.
Yeah.
But it was really once we left that it started to accelerate.
And how's Dubai funded? Like how did this oasis just come out of nowhere?
It's oil and tourism.
Okay.
I mean, Dubai's done an incredible job of focusing on tourism for revenue more so than being solely dependent on oil.
Got it.
Like a lot of the neighboring countries.
And they've just built like buildings everywhere.
I mean, the vision for Dubai has been incredible.
Yeah.
I remember in high school, reading something about Dubai 2030, the vision for Dubai 2030. And if you look at it, they've not just met that vision, they've exceeded that vision in every respect. It's unbelievable.
That's cool. All right, getting back into business. So you go to Mackinac. Describe kind of what Mackinac is and what they do.
Sure. So Mackinac, pure restructuring turnaround firm. So what does that mean? You go into businesses that are struggling. Either they're struggling because they're operationally challenged or they're struggling because they have a balance sheet that just doesn't work.
Yep.
9 times out of 10, you're going in on the behalf of private equity sponsors. So we've worked with numerous private equity sponsors that believe that don't believe the management team has the wherewithal to turn the business around, or the management team needs additional bandwidth to turn the business around or expertise. And that's when they bring us in. So we'd either partner with management teams, replace management teams to help stabilize businesses, create value, restore value, and then replace ourselves.
Were there certain sectors that you were focused on?
For sure. Did a little bit in the manufacturing world, started out in the manufacturing world, given the fact that I was at Banks Lumber, knew the manufacturing piece of it very well. Started in manufacturing, from manufacturing moved into leisure and hospitality, more specifically timeshare. And then from timeshare moved into restaurants. And the restaurant business has been incredible over the last, call it 10 years.
All right, I want to talk about timeshares and restaurants, but let's spend like 5 or 10 minutes. Like I'm a client and things are going sideways. I call Mackinaw, Nishant, we need help. What's like the process you go through is if I'm a distressed company, like what are y'all doing to help me out?
The first thing is, I mean, I get this question a lot, and especially from sponsors. Like the first question, even in a pitch, is like, what are you going to do to help the situation?
Yeah.
And it's near impossible to answer that question without knowing what the underlying problem is.
Okay.
So our process is being able to go into these businesses, not just look at the symptoms, but understand the underlying problem. What's causing the issue?
Yeah.
To be able to determine, is that fixable? If so, how long does it take to get fixed? How much does it cost to fix it? To be able to provide a detailed, strategic value creation plan on what the process is, what the initiatives are, how long it's going to take to stabilize that business. So oftentimes what we'll tell clients is, let's just do an assessment. Let's do an assessment to understand what the issue is and then how we fix that issue. And I think oftentimes it's easy to tell people what needs to be done.
Yeah.
Going that next level on how to do it and then having the wherewithal to actually do it is what differentiates us.
So do most people that come to you even know what their problems are?
They know what they don't know what the problem is. They know the business isn't performing.
Right.
The problem is not declining sales. The problem is not declining EBITDA. That's a symptom of the problem.
Right.
So I think being able to, tease that out and differentiate that this is a symptom, but what's causing it? That's truly the problem. How do we address that problem?
So how quickly can Mackinaw get to hear the root issues of what's going on? Does that happen in like a week, a month, a year?
It's really a 60-day process.
Okay.
And, that's something I've learned through my career, how important it is to listen.
Yeah.
Be able to sit across the table with management teams who know that business better than we'll ever know that business, being humble enough to, realize that and work with them to understand what is the core issue, what's caused the issue. Did we stray too far away from our core identity or our core attributes? And if we did, can we pull that back? Or have we just not evolved while the rest of the world around us is, moved on? So being able to have those open dialogues and conversations with management, it doesn't happen immediately because management teams are typically a little nervous when they see, a firm like ours come into a situation. But being able to talk to them as an operator, and that's what we pride ourselves on being. Like, we're operators at heart. Sure, we can restructure a balance sheet. It's not rocket science. The hard part is, how do you fix a business? So being able to talk to management teams as an operator to uncover what the true issue is, that's key. And that takes, good 30 to 60-day process.
Are you guys given full reign to talk to not just management, but can you go to like the floor of can you talk to anybody in the organization, or you typically have to stay at the top?
No, it really depends on the situation and how sensitive the situation is.
Yeah.
But most times, management teams, after you break down that initial barrier, they want the help.
Yeah.
They want the support. They understand they either don't have the expertise or they don't have the bandwidth.
Yeah.
And that's our role. Our role is not to replace anybody. Our role is to help make them successful.
And okay, so maybe you just answered the question. When you've diagnosed the problems, is there I don't want to ask a loaded question, but is there a percentage of how often the current management team in place can right the ship? Or is it usually like, hey, we got to bring in a new team?
It's 50-50.
Yeah.
And I think a lot of times management teams are fatigued. By the time we get into a situation, they've been beat up quite a bit. They've tried a lot. It hasn't worked. And they just, they're worn out. So I think a lot of times it's more that drives them out than anything else.
So maybe we've touched on a little bit, but what are the reasons why companies go into distress?
It's a great question. I think it comes down to a couple of things.
Yeah.
At least in my experience, there's like 3 things that I can break it down into. One is, I think oftentimes companies stray too far away from what's made them successful. It's aspirational. They want to go chase a different customer set. They want to elevate their brand. They want to do something that might not be core to their identity. Mm-hmm. And I think that's incredibly confusing to consumers.
Yeah.
That's one that I've seen. The other one is the flip side where they don't evolve enough. They stuck in their ways. They know this works, but the whole world around you is moving forward and you're not.
Yeah.
And I think you saw that, the best example of that is a Blockbuster, right? Who didn't go to a Blockbuster? But Netflix came around and just blew them away, made them irrelevant. And then the third thing, which, is hard to sometimes bring up, is I do think that capital providers out there that are just overbearing. And it puts management teams in a really difficult position where they're more focused on pleasing and appeasing capital providers as opposed to running a business.
So when you say overbearing, meaning like they buy the business and they come in with this fresh set of rules and it's just kind of too much?
Yeah, I think there are capital providers out there that suffocate management teams.
Yeah.
I think you need to be able to trust who's running your company. And if you can, then you need to replace them. But you can, you can't babysit them all the way. So being able to recruit the right management team, retain that team, incentivize that team, that's what capital providers should be focused on, not, telling management teams how to run the business.
I want to go a little deeper here because we're hitting the boomer generation. There's a lot of businesses that are about to sell to private equity that have been family-run businesses forever. What does suffocating really mean? Like, what are things that capital providers do wrong that really start squeezing the business that's kind of unnecessary?
I think one of the things is capital providers are amazing at structuring businesses. They're amazing at, being able to finance and put strategy in place. But there's a big difference between strategy and, structuring a business and operating a business. So how do capital providers bridge that gap to give them a level of comfort? They hire, retain, or have on payroll operating partners. I think operating partners can be hugely beneficial to companies, but on the flip side can be detrimental to companies, where an operating partner goes in there and again tells management what to do, as opposed to being a resource and helping them in doing it.
Yeah.
And if I'm the CEO of a company, the last thing I want to do is have to prepare and spend a day or a week with an operating partner as opposed to my team running the business.
Yep.
So I think it's overcompensating for, capital providers' lack of confidence in management teams that just accelerates the problem.
And are most of these companies given a forewarning like, hey, this operator is about to bust through the doors and start telling you what to do? Or it's kind of like, hey, this is all going to be great. And then the day of closing, it's like, bam, here they are.
It's absolutely the latter. it's absolute. Like when they're dating, everything is great. And once the deal's done, it's like, all right, you're going to have so-and-so there to help with HR. You have so-and-so there to help with accounting. We need these reports, which is fine if it's done the right way.
Yeah.
It needs to be collaborative. Management teams need to know. Management teams need to want to pick up the phone and call an operating partner, not be dodging calls when those calls are coming in.
Yeah.
And I think it's all about how it's presented and honestly, the maturity of the management team as well, but how it's communicated from the sponsor.
Have you seen a lot of family businesses that were excellent businesses for years, and as soon as they sell to private equity, it starts kind of crumbling?
Oh yeah, absolutely.
Yeah.
But I've seen the flip side as well.
Right.
Great, family-owned businesses that might not have the structure that's needed or the strategic angle that's needed or the access to capital that's needed to take them to the next level. I've seen those do incredibly well. But on the flip side, I've seen, big capital come into family-owned businesses, and there's such a conflict in culture and how things are done that it's a difficult bridge to gap.
All right.
To bridge, I guess.
All right. So we're through the first 60 days. You kind of diagnosed what's going on. Then what happens?
Then it's really about building out a plan.
Okay.
And the one thing that I've been very focused on is what I call strategic value creation plans.
Okay.
And these plans, again, I keep coming back to, are not what you need to do. Certainly that's a part of it, but it's how you do it and what are all in specificity, what are the initiatives that need to take place to be able to realize either the revenue growth or the EBITDA growth.
Okay.
Who are the responsible parties? What's the timeline? What's the cost? So these strategic value creation plans address every aspect of a business, top line to profitability, to systems, to HR, team building, culture, etc. And you go through those plans, and I'll give you an example.
Okay.
Restaurant business.
Okay.
One of the big revenue streams, and it's continued to grow year in and year out, is catering. Right? So a lot of companies that you go into, we want to build a catering business. Okay, great. That's an initiative. Well, that's an initiative, but within that initiative, there are about 50 different tasks that need to be done to make sure that that initiative is a successful initiative. Everything, what's the radius around the restaurant that you're going to cater to? What's the menu going to look like? What's the packaging going to look like? All that level of specificity is where I think a lot of companies go, make mistakes.
Okay.
Because they don't go into that level of specificity. So for us, in building out these plans, you go into that detail. Every one of those tasks that hit a different department or have a different sense of responsibility, a person that's responsible for it, we build that out. So every day when people come in, they know exactly what they're doing. They know what the focus is. They know what their timeline is, and you have a high degree of success.
Do you need to get management to give you the thumbs up or, okay, we're going to do that?
It's incredibly important to build these plans out in conjunction with management teams.
Yeah.
Because you want their buy-in.
Yep.
This is not us telling management teams what to do. It's us working with management teams to come up with what needs to be done and carrying the water and doing the heavy lifting and building out these plans. So that once you think about it on the front end, then you're just executing. You're not trying to constantly think about what needs to be done every day. You've done that on the front end and then you execute. Do you need to pivot sometimes? Absolutely. But all the heavy lifting is done on the front end.
So what's the typical engagement with a company?
6 to 12 months.
Okay.
Yeah.
So 60 days to diagnose it, implement the plan, and you should start seeing results.
Exactly.
And as soon as they're kind of lifting back off, y'all are on to the next thing.
Exactly. And oftentimes we'll still continue to have a board role or just be there for management if they need it, but we pull out a bunch of the resources because these companies need to be able to operate on their own. We've come in there, we've helped them build a plan, helped them begin the execution of a plan. And at that point, it's, take the training wheels off, let this management team run on their own.
Are y'all retained kind of post engagement to kind of monitor, 2 years out, 3 years out, or once you're out, you're out?
No, there's a lot of continuity,
either
from a board perspective or just working directly with the management team.
Okay, so this is just a dumb question, but you think about these big restaurant chains that have all these people and they must know everything. And then we just go through this catering example, which I know we kind of simplified it.
Yeah.
But when you hear it, it's well, duh. Why do companies do they fail in spite of themselves? How is it not so clear to these great restaurant executives that have been in the industry forever?
I think it's a couple of things. One is it's a lot of work on the front end to break every one of these initiatives down into granular detail.
Okay.
To heighten the probability of success. So I think a lot of CEOs, a lot of executives, they rely on they know the idea, they know what needs to be done, but then they hand it off to someone else to do it.
Yeah.
I just think you have to be hands-on.
Yeah.
And that's been, my style all along. And it's something I need to caution myself on, is not to be too hands-on.
Yeah.
Right? Because you don't want to be caught in the weeds and you have to be able to trust your team. But being able to build the way I've figured it out, where it works, is building it out together on the front end and then letting them execute, and then being able to manage through that strategic value creation plan as to where we are and keep everyone on task, but not getting into, the business on a day-to-day basis with every department.
Right. You ever go in and see a business, you're like, sorry guys, we can't help you.
Absolutely.
It's a dying industry, and you'll just kind of tell them you need to shut the business down.
Absolutely.
Yeah.
For us, it's all about your reputation. You don't have much of a reputation as a turnaround guy if you don't turn things around.
Yep.
And I've always been really thoughtful about the engagements we take. And that's a really difficult conversation to have with a sponsor or a lender who's put a bunch of money into a business. Say, this is not a business that we believe we can fix.
Yep.
And it's for a couple of reasons. It's either there's some massive macro shift, or the cost and the time to do it is not worth what you're going to get out of it, or you've just disappointed a consumer for way too long and there's just no coming back.
Yep.
And that's why that diagnosis phase is incredibly important, both for the client, but also for us.
Yep.
It's by reputation.
Is it just is the way Mackinac makes money through fees, or do they get like a piece of the upside if it turns around and it's super profitable, or both?
It's both, but 90% is on a fee basis.
Yeah. All right. So you've had this, your view of the world is awesome because you know what a terrible deal looks like, which is actually maybe more important than knowing what a really great deal looks like. But you also know what a good deal looks like. So let's kind of move into what that experience has led you to do. And maybe let's start with the company that you built, the timeshare business. How did that come about and what was it? And
yeah, that was just an awesome experience. So 2008, 2009, the world's, falling apart, and I didn't know anything about timeshare.
And how old were you at this time?
I was 27.
Okay.
8. Didn't know anything about timeshare. Got, dropped into Laguna Hills, California at a timeshare company, and didn't know if timeshare was one word or two words, and I had to figure it out pretty quickly, but thankfully I'm a good listener. Got into it, started to understand the business, and I was really fascinated by the business because, on the face of it, it doesn't have a great reputation.
Yeah.
But it's just a phenomenal business model. I mean, it's really a finance and real estate company.
Yeah.
Right? So you build these resorts and then you sell through them, and you sell, every room 52 times because everyone buys a week. And so the revenue model's incredible. And then because a single individual can't pay $20,000 out of pocket, they need to get financed. So then the timeshare company finances that. So you have this consumer receivable portfolio. You have your revenue model on the operating side. It's an incredible business. So learned a ton about it. I was there for about 3 years. Helped stabilize that business, helped manage liquidity of that business, understood every aspect of it because it was, falling apart, and then eventually sold that business to Diamond Resorts. Once we sold the business, and through my time at the company, the one observation I had was with all of these resorts, there are thousands of resorts across the country. All of these resorts were repossessing defaulted inventory. But resorts, very much like a condominium building, once they hit a certain threshold, the developer is out of the mix, and an HOA board runs the resort. HOA boards don't have the wherewithal to resell foreclosed on inventory.
Yeah.
So I started seeing that. So what would happen was these resorts would be sitting on all this defaulted inventory, which means they're not getting HOA dues, which means they can't upkeep the resort. So following that chain, it's like, well, there's got to be a way for them to monetize that inventory. So I talked to the CEO at the company we were advising, and he was, with the sale, he was moving on. And I asked him, I was like, well, what do these resorts do? He's like, well, they're kind of limited. He said, what's probably going to happen is someone's going to come in with a bunch of capital, buy that defaulted inventory, and then they'll resell it. So I was like, well, we don't have a bunch of capital, but we do have, the wherewithal to build a sales and marketing platform to resell this inventory. So we, from scratch, it's never been done in the industry. We built a model where we went to the resorts, we got their defaulted inventory, got them to agree to give us the defaulted inventory on a just-in-time basis. And then we started to sell through that inventory. We started with one resort. We ended up with thousands of resorts because we were the only way for them to get a paying owner back into the system.
So I'm a resort. The people have bought timeshares. They have their they've financed them.
Yep.
Everything goes to hell in a handbasket. I can no longer pay off my timeshare. Resort takes it back.
Right.
They hire your firm to now say, look, you don't have to go sell all these to some distressed buyer. We're going to be the company that helps you resell these again so you can keep ownership and keep going.
That's exactly right. We were their sales and marketing arm. So we built it up from, me and my partner, Andy. It was us two doing everything to where we had 5 offices. We had over 100 employees. We built an incredible business, and then we sold it to Interval International. I exited, Andy stayed on, and then Interval just a few years ago got bought by Marriott.
Okay, so this is like fascinating because it's just you're multi-dimensional in a lot of ways. But okay, you see this opportunity. Had you ever built a sales platform before, or it was just obvious that you needed to build one?
It was. I knew how the sales and marketing platforms worked because of the client I was with.
Right.
So I understood that very well. And Andy's background was in sales and marketing.
When I think of a sales platform for a timeshare, I think of going to the mall and seeing that like Corvette sitting in the lobby, and you sign up the thing and they'll do a drawing. You get a call that's like, drive to Tyler, Texas, and you get a free Corvette, and you show up, and it's a whole like sales of. So what were y'all doing differently?
That was it.
That you invented that?
That was, I didn't invent that. We just piggybacked off of that. But our focus was not to be that person in the mall. Our focus was, because you can buy those leads. Those are just leads.
Yeah.
Right. It's all lead generation. So you can buy those leads. We would buy those leads. We would reach out to those people. We would get them to come into the sales office and go through the pitch. So we were more on the sales side than on the marketing side, but we had enough of a reach into marketing to be able to, get access to those leads. And the one lesson I learned, which will stick with me forever, I remember, a lot had gone into building the business, and just getting any business started takes a ton of work. Got the business started. I remember we opened our first sales office in Las Vegas, and which is, timeshare Mecca, and all excited. We go there. I didn't go there the first week. So I learned 2 things, actually. I didn't go there the first week, and, sales reports were terrible. I mean, we had sold like 1 timeshare, and we had, call it 50, 60 people come through. So, wasn't sure what was going on. So the second week I was like, I got to go there, see what's going on. Is it the salespeople? Is it the product? Like, what are we doing wrong? So went there as a regular consumer, going through the motions. So you go through, and then when people were leaving, I asked Scott, I'm like, what do you think? And the first thing the guy said to me is like, sounds great, but it's got to be a scam. It's like, why do you say it's got to be a scam? Like, those timeshares that they're selling originally sold for $20,000. How's it possible that they're selling it for $7,500? It's a scam. And that's when the light bulb went off. I'm like, perception is everything.
Yeah.
And literally the next week we changed the pricing, and we never looked back.
So what tell me what you did there. You left it at 7,500, or you took it back to 20?
No, we took it up to, we didn't take it to 20, because then we'd just be competing with the big resorts.
Right.
So we took it to between 10 to 12 and a half, and we never looked back. And we had a good narrative around why. So people understood. So what I learned through that experience was perception is incredibly important. And the second thing is, if you're running a business, you need to have your boots on the ground. You can't run it from somewhere else and expect things to work. You need to be there. You need to understand what consumers are saying. You need to be in the flow to know what you need to fix and what you need to address.
That is literally the thought I had. Like the CEO that sits in his ivory tower suite and never has an idea what the customers are really up to. Like you just showing up that day in the office and hearing that one thing turn the whole business around.
Changed everything for us. And that's,
so what did you do as soon as that happened? Like what was like the next week? You called your partner? Or?
Next week, like the next hour, I called him. I was like, I think we have a problem. We're just, we've priced this wrong.
Yeah.
And it was, I learned a lot through that deal. And one of the other pieces that really resonated with me and it stuck with me for a while is how important it is to have the right partners in any deal that you do. And with Andy, we complemented each other incredibly well. We stayed in our lanes, but never, we were never bashful to ask each other about something that we were focused on. Mm-hmm. Oh, that was our responsibility. And we listened. We listened about, what do we think needs to be done to help the business? Good things and bad things, mistakes that we made, and how do we address those mistakes? So to me, partnership in anything is incredibly important, because I think it's the difference between being successful and, having major issues.
It's so funny because the timeshare business just in general, like you always hear people that own them and they're like, I can't get out of them. Like, I just want to sell. Is there a business to be had just being able to sell your damn timeshare like easily? I think it's like the number one thing I think about when I hear the timeshare industry is like, once you get it, you're never getting out of it. Is that true?
It's partially true.
Is that a bad thing?
People's lives change.
Yeah.
Right? People's lives change. And when they change, they want to get out of it.
Wow.
And most times, those people have already paid off their timeshare. So the only thing that they're paying is their HOA dues. Oftentimes, the timeshare companies will take it back, because if you think about it, it depends on where we are in the economic cycle. But if for a timeshare company, if you, Chris, come to me and say I'm a timeshare company, he's like, kids have all graduated. We don't do the vacations like we used to do. It's just me and my wife. Like, I don't want this timeshare anymore. Sure. Most times they want to maintain keeping that HOA coming in. But for them, if they're tight on inventory, they'll take that back in a heartbeat, because they just resell it.
Yeah. I'm like laughing in my head thinking of Las Vegas being the timeshare capital of the world. Like, that is America to a T.
Absolutely.
Show up to the gambling haven of the world, buy a timeshare for a week.
Here's a cocktail. Let's talk timeshare.
And it's a good business.
It's huge.
All right. How did you know it was time to sell that? So you were like Mackinaw was a client of Mackinaw, then you spun in and started it. Was there a game plan like, look, we're going to get to this size and then we're going to exit?
There was never, we knew who our potential exit opportunities were. And from the very beginning, and I have this, mindset with everything that I do. If I'm building a business, I want to know who I'm going to exit to.
Yeah.
And you don't build a business exclusively for that potential, exit partner, but you definitely keep that in mind with everything that you're doing. And that's what we did every step of the way, because we knew we were building a product that was going to be helpful to an Interval International. So there was never a timeline on when we wanted to exit. But for me, there were so many competing things going on in my life. And I was like, well, I want to be able to take capital off the table, to be able to reinvest and do other things that I want to be doing. It was a great opportunity to do that. Everything kind of lined up. So, jumped all over it. Was it hard? Absolutely.
Yeah.
I remember the night before we were supposed to sign, I was having dinner with my wife and I'm like, I just don't know. We built this from scratch, from nothing. It was a 12-page PowerPoint presentation, funded with cobbling together dollars that, we had and friends and family. And it's like, wow, to walk away from that was hard, but it was definitely the right decision.
All right. I want to get into what you did after that, but you just you've said a few things that I think when I have a lot of people on this podcast that are entrepreneurs or business owners, they've followed their passion and they love what they're doing. And you've kind of built a career on look, it's business. You didn't grow up dreaming to start a sales, but you have a very good filter for and I know we're going to get to this, and you've said something in our conversations leading up where you just said, the next 3 to 5 years, I'm going to work on this because I can't think of anything that's more ROI on my time than this.
Yeah.
Maybe just tell the listener, you can be really successful in business and you don't have to find the thing that you just love. It's okay to be in business. And how do you think about that? When I think of starting a sales company for busted timeshares, my first thought is I want to do that. I want a hole in my head. But you sit here and you're like, no, there's huge opportunity and money there. And I'm comfortable spending 3 to 5 years working on it. Speak to that just a little bit.
It's not just the money. It's really about, and it is a passion. The passion is to be successful at what you do. And being able to do it with the people that you like.
Yeah.
Right. That for me, that's the most important thing.
Yeah.
For some things, it's not the industry specifically that I'm passionate about. It's who I'm working with and a pure desire to be successful.
Yeah.
If you're going to do something, do it to the best of your ability.
Yeah.
That's been drilled into my head from the time I was a child. And it's more focused on that than anything else. And really understanding, being logical and thinking through, what is the highest and best use of my time?
Okay.
And then build a team around that, be focused on it and commit to it.
Yep.
Like the three things, and it's somewhat of a cliche, but everything that I do is like honesty, trust, and commitment.
Yep.
Be honest about the situation, good, bad, ugly, whatever it is. Be honest about the situation. Trust the people around you, your team, to be able to execute, and then commit to doing so. And that's been my mantra forever. I bring that to every situation I'm involved with, and that's the passion.
Yeah.
It's not specific to an industry.
Define real quick again the difference between honesty and trust.
Honesty is being able to truly put on the table what's working, what's not hiding behind anything. Just be honest about the situation.
Yeah.
And trust is knowing that you've built a team that you can trust, and you trust everybody to do their job, and you don't have to second guess anybody.
Yep.
And that's the culture I try and set with every organization. It's like honesty, trust, and commitment.
Yep. All right, let's move into kind of the restaurant industry. So you sell this business. You're currently the CEO of Macaroni Grill.
Right.
But was there something you did before that, before you got into the restaurant industry, or?
Yeah, I mean, jumped right from timeshare into restaurants and restructured a number of different restaurant companies, Logan's Roadhouse, Real Mex, Garden Fresh, the list goes on. But again, just being opportunistic and, was opportunistic in timeshare and then did a bunch of restaurant deals. And the one thing I saw with the restaurant deals is there are a lot of legacy brands. Whether it's the Logan's Roadhouse, whether it's the Macaroni Grill, there are a lot of legacy brands that still have incredibly loyal following, and they still do massive revenue dollars, but they're not that profitable.
Yeah.
And they're not that profitable because over the years, margins have shrunk, right? Minimum wage has gone up, commodities have gone up. You can't pass all of that along to a consumer.
Right.
So I developed a thesis in late 2017, which was really focused on, a roll up of the industry, specifically legacy brands in the industry.
Okay.
And it was being able to, it's pretty straightforward, be able to identify brands that deserve to exist, brands that you believe you can turn around. And I think you have to be really, really disciplined. Operators have a knack of believing they can fix everything. You simply cannot.
Yeah.
So being very disciplined and understanding what you can fix, and then being able to build a platform. And I define platform as people, systems, and process. Build a platform and bolt these legacy brands onto that platform. So you can, rationalize G&A. You have one, infrastructure that everything is operating off of. And you can do really well. Darden's done it. Brinker's done it. Tillman's done it. It's a brilliant strategy. So came up with this investment thesis, 16 or 17, went out and talked to a number of different private equity sponsors about it. And there was a lot of momentum behind it. And then had Macaroni Grill as an opportunity. I'm the second largest shareholder in Macaroni Grill, and Sullivan Steakhouse. And we believe that was the right platform for us to use to go do the roll-up strategy. So
you raised a fund or
I partnered with a relationship, Raven Capital, that I've known for a long, long time. And these were all the groups I was talking to about doing this. And when Macaroni Grill came up, it was perfect with Raven. We went in and we acquired it. We've completely revamped and built out the platform. We stabilized the business. We turned that business around. Then within a year of doing that, we acquired Sullivan Steakhouse. Sullivan's was a carve out from Del Frisco's Grill. Not Del Frisco's Grill, but just Del Frisco's.
And Tillman got Del Frisco's?
Yeah, that's right. We took a year before Tillman's transaction was when we took out Sullivan Steakhouse from that. We carved it out. We bolted that on, turned that business around. It's crushing it.
So do you still own Sullivan's and Mac Grill?
Yeah, I own 40%.
All right. Well, you don't get out that quickly. We're going like details here. So one, how did Macaroni Grill, how was that deal even sourced? Just kind of in the market, they're struggling, they're about to sell, or?
No, this is the symbiotic relationship with Mackinaw.
Mm-hmm.
So it was originally a Mackinaw engagement.
Okay.
And the mandate, very similar to every Mackinaw engagement, was come in, stabilize the business, turn the business around. And the ownership group at that point was like, just turn around and get us out. We just want to get out. This is not our core business. So it's like, okay. So came in, stabilized. And well, let me take a step back, because Macaroni Grill was originally a carve out from Ignite.
Yeah.
And Ignite is based in Houston. And the new ownership that was carving it out was moving to Denver.
Okay.
So that's what I kind of picked up on. It's like, you have to when you're moving it's a carve out, you have to build systems, you have to rebuild the team, and you have to put process in place.
Yeah.
That's my definition of a platform.
Yeah.
So they were looking to me to do that.
Yeah.
And Mackinaw to do that. So I quickly started piecing it all together. It's like, this could be the platform, because I have to rebuild it. And I get to build it from scratch the way I think is the best way to build it, as opposed to going and acquiring something, inheriting problems, and having to fix those problems. So we built the platform the way we thought was best. We knew the ownership group wanted out. We were very open about that discussion all along. We got that ownership group out. We were able to refinance, get them out of the picture, out of the capital structure. Then Raven and I came in and took it over.
Okay. And what was the problem with Macaroni Grill at the time?
Very similar to a lot of legacy brands. I think there were a couple of things. One, it had been neglected as part of Ignite. Ignite had Joe's Crab Shack, and it had a beer concept, and that's what they were focused on. And, it was just sidelined.
Yeah.
And I think the other piece was they tried to move, again, stray a little too far away from what made them special. When I went in there, the one thing I kept asking, I love looking at consumer feedback and doing consumer, research, because I think that's what, that's very telling about what needs to change. And the one thing that consumers consistently said was, Macaroni Grill is where we go for a special occasion, right? If it's where we go for date night, it's where we went for prom, where we went for, this celebration or that celebration. So it's always a special emotional connection that consumers had with Macaroni Grill. And that's something you can tap into.
Yeah.
When it's purely transactional, like, there's not much you can do.
Yeah.
Fine, lower price. What else do you have? Increase portion sizes, all of it just kills margin. So for us, it was, how do we tap into that emotional connection? And why did that, where did that get lost? And then when you really dig into the business, it was the small things that just, it was really cut, death by 1,000 cuts. And things like Macaroni Grill was known for the honor wine.
The wine.
The jug of wine on the table, and it was the honor system. So if you had a glass, you mark it on the table. That's one glass. 2 glasses, you mark it on the table. People cheated all the time. It was factored into, the cost. Trust me. So that was not the issue, but someone did something. This is where I say capital structures sometimes don't have a 360 view of the business. Someone made a decision somewhere to say, why are we doing this honor wine? People are cheating the system. We're losing X $100,000. Pull the honor wine off.
Yeah.
So they did that. Well, people came in for that. That was something that was that emotional connection they had that made it special for them. That was gone.
Yeah.
And you take that times, 100 different things that they did. So when we took it over, it was like, those are easy things for me to fix. Not only are they easy, it gives me great messaging to go out to, a consumer base of, millions of people and say, that was our e-club, our email database was millions of people to say, guess what? Honor wine is back. Guess what? This dish is back. Guess what? Opera singers are back. You have so much to work with. So that's really what I saw was they strayed too far away from what made them special, made them unique, became generic. We pulled them back into, this is what's special about it, and own it. Don't run away from it. Own it and use it to your advantage. So that's what we were able to do. Turned it around, reversed the negative same-store sales, and had, year-over-year same-store sales growth, implemented our systems, so had massive margin improvement. And that's what gave us the ability to go do the Sullivan's acquisition.
How many Macaroni Grill restaurants are there?
There are about 60 Macaroni Grills.
Is it all across the country, or is it Sunbelt only?
No, it's all across the country.
Okay. And is there room to like grow that brand, like open more, or is the goal just do really well out of those 60 stores?
It's to do really well out of those 60 stores. And I think growth, we're really focused on growth in an asset light model internationally.
Yeah.
I think the franchise market internationally for a brand like Macaroni Grill is significant.
Yeah.
American brands overseas do really well, especially in Asia and the Middle East.
Okay.
And this is an iconic brand. It's been around for 30 plus years. It's got massive brand awareness. I went back and looked at one point, the total marketing dollars, just what I could quantify easily, total marketing dollars against this brand exclusively was north of 150 million.
Wow.
So $150 million pumped into, media where family members, people just know the name.
Yep.
They might not have been there in a long time, but they know the name.
Yep.
And that brand awareness is important. And for us, I'm like, how do I take that? If that's an asset, if brand awareness is an asset, how do I monetize that asset?
Yep.
And the best way to do that is through international franchising.
If you look at the historic financials, you'll see this uptick in 05 and 06. That's when I was at TCU. that is where, if I ever went on a first date or was dating a girl, Macaroni Grill was our first stop. Okay, so let's just chat a little bit about what it's like to own a big restaurant chain during COVID. So you're kicking ass. You head into 2020. I'm sure your projections for 2020 were maybe, you might have actually beat projections. There's a lot of businesses that did really well. But when did you start knowing from your seat that something was up?
So it's interesting. We were working on another acquisition at the beginning. It started chasing this deal in November of 2019.
Okay.
With a goal to close, I remember February 14th, because it was my birthday. It was like, let's try and close before February 14th. And like every deal, it got pushed out a little bit. And then it was, we're going to close at the end of March. And our core business, Sullivan's and Macro, had turned around. They were doing great. They were, they were well-oiled machines. So I was very focused on the acquisition. And one of the lenders, which is a massive, massive lender who was going to help finance the deal, they were the first ones to call me up. And they have an international, worldwide perspective. Call me up and ask me about coronavirus. And full disclosure, I had no idea what they were talking about. So I was like, well, I'm sure we can navigate our way through that. Like, it seems like it's pretty bad, in parts of Asia. I was like, yeah, I'm like, but we'll be okay. And immediately get off my researching everything I can about coronavirus. And, was a little worried, but wasn't all that concerned. And you fast forward a couple of weeks and they call back and I look, we have a global, worldwide perspective. We have significant concerns about coronavirus. And we just need to go pencils down for 30 days. That's when I knew. Like, they're one of the most sophisticated lenders in the world. That's when I knew. And that's before it really hit us here. So
and that was November?
No. That was in late February.
Okay.
Late February, might have been the first week of March. And that's when I knew, I'm like, there's something brewing that we're just not privy to. And I mean, you're listening to the news but again, it was so distant. It was like, that's in Asia. It's not going to happen to us here. But it became a reality that second week in March when, the cases started to rise. I remember I was in Napa with my wife just, for a long weekend, and I wake up and I was watching the news. I'm like, this is going to be really bad.
Yeah.
And we had a flight back, and I was like, I'm not flying. Like, we rented a car and drove back to Southern California, and I was on the phone, I think every minute of that call with the management team about what are we going to do?
Yep.
And thankfully, we were positioned really well because off-premise was always something I believed in. Off-premise was something that we, really honed in on over the years. So we had that trigger to pull. And that saved the business. That kept us in play when a lot of companies didn't have off-premise, especially not, to the level that we did. So yeah, it was controlled chaos. And every day there was something different. Every day, especially when you have a national footprint, every jurisdiction, every city, every state is different.
Yeah.
Things would change. It was so fluid. So it really tested, the silver lining here. And it's something I started to see probably in phase 2 of COVID, which was, June, July, August to me, was the resiliency of our platform. And yeah, if I define platform as people, systems, and process, it was really put to the test because you had to be agile. You had to be able to move quickly. You had to have people you trusted to do their jobs. You had to be honest about every little nuance of every situation. The platform held up incredibly well. I mean, we made so much change. And, when I look at COVID, I always think about it in these 3 phases. March, April, May, complete chaos.
Yeah.
It was just survive. And my mantra was just get to tomorrow. I don't want to talk about next week. I don't want to talk about, the end of the week. All I want to do is get through today and get to tomorrow. And you just keep having that same mentality until, you have some line of sight. So March, April, May, that was our focus. Then we got PPP money, and then you had a little bit of breathing room. So June, July, August, September, like, all right, I can take a deep breath because I know I have some liquidity and think about what we need to, like, how do I use this situation to our advantage? Right? Was it Churchill that said, never let a good crisis go to waste?
Mm-hmm.
How do I use this to our advantage? And that's when we really started to focus on what do we need to do to change our business model, firm up our systems, add on to our systems, upgrade our systems. So when we come out of this, we're going to be ahead of everybody else. And that's really what phase 2 was about. And then phase 3 coming into the holidays was, all right, how do we maximize and optimize what we've put in place in phase 2?
Yeah.
So coming out of it, we're in great shape now. We're focused on another acquisition as we speak, which I'm really excited about. But we've never been able to do that if we didn't have the right mindset within each phase to make sure 1, you survive and get through it. 2, you build a better business. 3, you optimize that business. And 4 is where we are today. We're, for the most part out of it. And how do we take advantage while everyone else is still licking their wounds?
All right. Loaded question. What was maybe the best decisions you made through COVID? And also, what was maybe the worst decision you made during COVID?
Best decision I made was not hesitating to close restaurants that were borderline or unprofitable.
Yep.
And again, it comes down to being humble and, making the difficult decisions when you need to. I think a lot of people held on for too long and you burn cash.
Yep.
And my mindset was I can always go back to a landlord. I can always go open another restaurant. What I can do is go get cash back.
Right.
So best decision was being disciplined and pulling the trigger when, it was a difficult decision to make. Worst decision through COVID was deciding to live through COVID. But I don't know. I mean, I think, I don't know if it was a worse decision, but it was with the management teams. It was a necessary decision with our management teams. I was determined not to furlough employees.
Yeah.
I was determined to keep one of the key pieces of our platform, which is our team, our greatest asset to keep it intact. But that came at an expense. And that expense was, I think overworking our management teams.
Yeah.
And it was necessary because most times you couldn't even have hourly employees in the early days in the restaurants.
Yeah.
I was like, I can rehire hourly employees. I've got a great team. I can lose that team, but it put more of a burden on them. So sometimes they're working 7 days a week. It was really tough, and there was no way to give them much relief.
Okay, so now we're coming out. I don't know when we get to say we're out, but I would just say we're out. What are the things about the business that change that will stick, or are we just kind of going to go back to the way it was? And then I just want to talk about, you just made the comment, like, I can always hire back hourly workers, but right now it's very difficult to do that. So let's talk about what's different about the business that will stay intact and maybe COVID was a blessing for. And then what's the state of kind of labor and things of that nature?
Sure. One of the biggest benefits of COVID was it gave especially legacy concepts this umbrella to make systemic changes that should have been made years ago. And one of those is just menu rationalization. You go to any major chain, 80% of the revenue comes from 20% of the items. But we were always too hesitant to take off the majority of the items that are slow movers because you don't want to upset any guests. Well, through COVID, you had the opportunity to do that. So if you go 90% of the restaurants you go into, if you look at that menu today versus that menu pre-COVID, I guarantee you it's a smaller menu today. So that's one of the changes that happened throughout the industry. And it's one of the changes that I think will stick for a long time because it helped improve profitability, because not just from a food cost standpoint, but also from a labor standpoint.
Right.
Just less prep, less activity. So that's one thing that I've seen. And thankfully for us, that was a project we were putting in place in December of 2019 to roll out at the end of Q1. So we had a head start. As COVID hit, it was like, pull the trigger, take off all these menu items that are not moving, and let's go with a rationalized menu. So that's going to be very beneficial to the industry and margin for some time to come. Going to the labor issue, hourly labor right now is incredibly hard to staff. Part of me thinks it's short term. Part of me thinks there's an aspect of it that's long term or longer term. Everyone obviously focuses on the stimulus and so on, which no question is causing massive issues. But eventually that's going to go away. You can only give away free money for so long, you think. Once that goes away, I think things start to get back. But honestly, I just think there are a lot of people who've left the industry.
Yeah.
It's a difficult industry to be in. You're on your feet all the time. You're dealing with people all the time. And I think through COVID, people have broadened their expertise. And they've looked at, wow, I don't want to be sidelined like that again. I want to be able to broaden my expertise. And I'm sitting on the couch getting free money. I might as well learn a different skill set.
Yeah.
And it's the small things, but they add up. It's like the Robin Hoods of the world. It's the crypto of the world. A lot of these retail investors, they haven't seen a downturn. They haven't seen what it's like when, the markets start to stumble. So right now for them, you hear this all the time. It's like, oh, I'm buying the dip. I'm like, what?
Yeah.
You're buying? Okay, well, since you're so knowledgeable about the dip, I'm sure you'll do great until it dips again.
Yeah,
so,
and again.
And they haven't seen that. So they still have this, they live in this kind of world where it's going to always go up. And you hear the stories about, this guy made $1 million trading crypto, and they think they can be that next guy. So I think part of it is no question the stimulus. That'll right size, that'll be fine. But I do think there's a longer term issue where there are people that have just left the industry and it's going to take a while to get them back.
So again, don't mean to ask such a generic question, but like, what the hell do you do about it? Do you invest in like robots that are going to prepare food? Do you just kind of wait and see?
You just have to be more efficient in your model.
Yeah.
Like you have to be more efficient in your model. You have to change, reservations and how you make reservations. You have to change how you, how long a wait is. At the end of the day, what you're trying to do is preserve the experience consumers have when they come into your restaurant.
Yep.
And labor is going to drive that. And the way you manage, your labor is you're either more efficient or you scale back on how many people you can take in.
Yeah.
So there are instances where, the restaurants that are closed, typically it would be open for lunch. We're closing for lunch because we need to preserve the hours to be able to allocate those hours to larger, and more important day parts like, weekend evenings.
Yep.
So that's what people are doing across the industry. You're cutting out, you're losing sales because you don't have the labor.
So when do restaurants make the majority of their money? On weekends and during the nighttime?
Absolutely.
All right. One more question kind of on restaurants, which I found interesting when we were chatting. But you just kind of said private equity, maybe for the last few years, kind of leading into COVID, was a little bit less interested in the restaurant industry. And now like your phone's ringing off the hook from private equity, people wanting to get in the industry.
There's a lot of interest in the industry. And I think it's a couple of things. One, there are value opportunities still. Now it's an interesting period because of this, I kind of call the vaccine high, where people are spending money. So restaurant comps are great and restaurants are talking about how everyone's coming back. Until last week when or was it earlier this week, retail numbers came out and they were a lot softer than they were last month. So you're starting to see it taper down and normalize somewhat. But private equity sponsors are smart enough to understand that they do see it as an opportunity for a couple of reasons. One, there are value opportunities, but two, there is a growth story, right? With the way commercial real estate is, you can get very favorable leases. So if you have a brand and you have a management team and you have a platform that you believe in, like, all right, I know I trust this team and I trust this brand to be successful. I know I can go get favorable leases. I can grow this at a much faster pace at a lower basis than I would otherwise be able to.
Yeah.
And there's just supply disruption. There's so many restaurants. I forget the last count, 150,000 restaurants that have gone out of business permanently. So you combine those two, it screams opportunity, which is, what a lot of the sponsors are focused on.
Yep. Oh man, that's fascinating. All right. So, back to the comment that you made, you said, there are certain times where I see the best ROI on my time. And, let's talk about kind of what you're doing in cannabis.
Yeah. So cannabis, I knew nothing, similar to timeshare in restaurants, knew nothing about the cannabis world.
Yeah.
Got introduced to the cannabis world by a very close friend of mine in December of 2019. And his vision was to build a cannabis beverage company. And it's like, Peter, I don't know I don't know anything about cannabis. I know even less about cannabis beverage. So, but I was like, I'm happy for you. Go for it. And, Peter he was amazing. And his focus was, he's like, look, I see, and he lived in the private equity world his entire career. And he's like, I see a massive opportunity in the space for all these reasons. I've done my diligence. So it's like, great, you should go for it. And he said, well, I would love for you to partner with me on the cannabis stuff because I do think, he's like, he was also someone who knew what he was good at and knew what his weaknesses were. He's like, you know how to build businesses, you know how to structure businesses, you're great from a strategic standpoint. That's where I could use the help. So I jumped into it with him. We built the business. We launched 2 months ago. It's been incredible. We're the only premium cannabis spirit on the market. The reception has been unbelievable. Focused on California right now. And when we built it out, we were very intent on meeting a few different criteria. One was premium quality. because there's a lot of stuff in the market that's just not.
Yeah.
2, we wanted it to mimic alcohol in a cocktail. So everything from how fast do you feel it, and to, how fast does it kind of dissipate? What's the form in which you drink it? Do you drink it in a cocktail, as a cocktail, as a spirit, etc.? So premium quality cocktail form. We were focused on health and wellness. So, it's got 2 grams of sugar and less than 10 calories.
Yeah.
And we wanted it to be familiar. We wanted people, because I think a lot of things in cannabis is very intimidating to the general population. We wanted this to be very familiar, very high end. So it's like going and buying a bottle of Belvedere and keeping it on your bar cart. So we were able to hit all of that, and the reception's has been phenomenal.
Can you just speak maybe some statistics? Because when you tell me this is the highest ROI on your time, like how big is the industry, and like how big is it going to get from your perspective?
I think the opportunity. I think it has the opportunity to be much larger than the alcohol industry.
Wow.
Which is a $1.5 trillion industry.
Wow.
Because there's so many different ways to consume cannabis.
Yeah.
It's not just in a liquid form. Obviously, it's the gummies. It's, to smoke it. It's the multiple different ways to consume it and buy products off of it. And we're still learning.
Yeah.
The plant is an incredibly complex plant that it serves multiple purposes. It's not just you take it to take, you smoke or you have a drink to take the edge off. There are aspects of that plant that help with sleep, that help with pain, that help with so much that we're still discovering.
Yeah.
So I think when you look at that industry as a whole, I think it has immense potential. Some statistics that I think are interesting. 66% of Americans support the legalization of cannabis. I don't think we can get 66% of Americans to agree on anything. So let alone, cannabis. So that to me, from a macro standpoint, is interesting. But then when you dial that down and say, all right, well, how does that translate into actual growth? The industry grew 46% in 2020. It's a $17 billion industry. And we have, I think it's 16 states that are legal.
Yeah.
So if you just think about that, one from further legalization, which we're seeing, New York's coming on board, and a bunch of East Coast states are coming on board. Growth in legalization, plus growth in consumer curiosity around the product, coupled with products like Pamos coming in the market, which are a lot more familiar, that people aren't averse to trying. I think the growth potential is, we haven't even scratched the surface.
Like if you had to say, how soon are we before like it's in all 50 states and it's just like normal? 10 years, 20 years?
I think you see legalization in the next 4 or 5 years.
Yeah.
Federal legalization. Now, states are going to continue to roll them out, right?
Yeah.
The tax revenue is incredible. So states are going to continue to roll them out, but I think federally you're still, probably 4 or 5 years away. But the federal legalization actually doesn't hinder, the growth prospects for the industry.
Yeah.
It's really on the state level. But it's a fascinating space. The California market represents 4.5 billion of the 17 billion. It's the largest cannabis consuming market in the world.
Yeah.
Not just the country, in the world.
You said something in a conversation we had, something about like, this whole digital generation of young people that spend all day on the computer or their phone. Like, you don't really get drunk and play video games, but you might, have a nice, there's definitely kids, or we're not even kids, but young people that they smoke weed and play video games. Now you can like sip a great drink, play video. It's a lot more kind of for the digital world is kind of the cannabis style than it is hard alcohol. For sure. I mean, it's applicable to such a wide range, right? Because with the product that we have with Pamos, if you go to a dinner party, it's just like having a cocktail. Yeah.
It can be totally social, you can hang out, it takes the edge off, but it doesn't, make you just sit there on the couch in a daze. So you're social, you're active, you're part of the conversation.
Yeah.
Conversely, you're sitting playing video games, you're not going to, sit there and drink a bunch of alcohol, but you could have a Pamos and take the edge off, enjoy yourself, and still be, functional.
Yep.
It's interesting. 48% of cannabis consumers are millennials. And the second highest consuming population, demographic of the population is Gen X. So if you look at that age group, it's really from, 30 to about 55.
Yep.
And then I think the boomer generation is still uncertain as to whether it's legal or not. So they're still a little wary. But as that, as it starts to get more mainstream, I think you're going to see the boomer generation come into it as well.
Sorry, Mom, but my mom started taking like a gummy for bed. And it's as soon as that happened, I was like, okay, the walls are coming down quick, because my mom would have never been that person, but it helps her sleep. It helps her, the whole deal.
It helps. I totally agree. The number of people that I know that consume cannabis that I never thought would consume cannabis is amazing. And it's for those reasons. Like, at the end of the day, we all work hard. We all have responsibilities. We're all stressed out about something or the other. You want to be able to go home. You want to be able to hang out with friends and take the edge off, right? That's why you have a cocktail, and it's a ritualistic thing. So for us, it's how do you create a product that helps take that edge off, but at the same time, it doesn't dull you or it doesn't impact you the next day.
Yep.
So you can have this cocktail, you can take a gummy, you take that edge off. The next morning you wake up, you're fresh, you've slept really well. It helps with body aches. You're not achy. You're ready to go.
I love it. All right. 2 more things on business, and then we'll get to some personal stuff and then go have a great lunch. But so the cannabis industry has gotten you interested in cannabis, not just for the company you're building, but investing in it. And without going into maybe what you're investing in, things of that nature, the thing that really stuck out to me was how you were thinking about raising capital.
Yeah.
It was like under this club type of format. So can you just talk about the idea, why it made sense to you? I've seen private equity a million times. I've never heard of this, and I thought it was awesome.
Yeah, for sure. Like we've been talking about, I've been around private equity my entire career, and I've seen, the good, the bad, the ugly. And the one thing, having experience with Pamos, is seeing how much opportunity there is in the cannabis space to invest. And that's for 3 reasons. One, there's absolutely a lack of capital because traditional private equity with the LP base they cannot invest in cannabis. Traditional lenders can't invest in cannabis. So there's this void from a capital standpoint. So again, just being opportunistic and being able to connect dots. It's like, all right, there's a capital void. There's massive growth. And then the third piece is there are operators that are inexperienced, immature from a business standpoint, and, just don't have the operational expertise to scale and grow their businesses.
Yeah.
So a group of friends of mine, and we invest in a bunch of stuff together. We were looking at this. We're like, we should be able to selectively invest in things in cannabis. Then it came down to like, how do you structure that? And everyone talks about, you want to raise a fund, you want to do this. It's like, well, what do most LPs hate? They hate management fees.
Yeah.
Right. So what we've talked about doing is like, you have a club of investors. They get to look at deals. They get to opt in or out of a deal.
But what do they need to do to be able to be given the opportunity to look at deals?
Yeah. The thought is they have a administration fee.
Okay.
Initial fee, a one-time fee to enter the club.
Okay.
Once you pay that fee, you're in the club. You get access to all the deal flow. You can opt in and out of deals. And it limits any continued cost to the LP, to the investor. They have complete optionality whether they want in or out of that deal. They have a trusted operating team that's focused on that deal. So it gives them what they want. And then from a GP perspective, all the deals are not crossed. Each deal stands on its own. So it was a way to come up with a structure that was desirable to LPs, but also desirable to the GP. And it provides access to an industry that's, significantly void of capital right now.
And in theory, if you paid the fee up front and then you never invest in a deal, that's kind of your loss for paying the fee to get in the club.
Right. And there has to be something otherwise you're just a fund sponsor.
Right. Yeah.
Right. So it has to be something that makes it worth, it makes an LP look at the deal because they've got some skin in the game.
Okay, I'm going actually backwards before we get into the personal, but I had written this down and the platform, the people system process. And when you were talking about taking over Macaroni Grill, you just said, I get to do it how I want to do it. Can you just shed like a little light on like what, when you're thinking about building the platform and maybe literally from maybe that 60 to 90 days, is it the same playbook every time, or do you look at each situation with a fresh set of eyes and like, what's your definition? I know it's people system process, but how do you know you got your platform right? Like this is the one that you want to be on.
It's slightly different every time.
Mm-hmm.
The core pillars are the same.
Yeah.
But then how you structure that might be a little bit different.
Yeah.
And when I say I got to build it the way I wanted to, it's really got to build it the way the team wanted to.
Right.
And understanding what's best for that business, what systems are best for that business, what type of person is best for what we have coming, ahead of us. Because I don't think skill set is one thing, but personality is just as important. And being able to hire the right person at the right time based on what that business need is critical.
Yeah.
And that's something, again, I keep going back to, I think people are the biggest asset in any business. I think any great company is built on the back of great people. And it's how do you identify the right people for the situation?
Got it.
So that's really the core pillars are the same. How you structure them are different based on what the exact need is.
What's the difference between a system and a process?
So systems are the systems, right? The software. The process is the controls and the discipline you have around being able to maximize the use of that system.
Got it.
It's the reporting, it's the accountability, it's the controls to make sure that you have everything dialed in the way you want to. And it's something you can replicate and you can scale.
Okay. All right. A few personal ones and then we'll bring it home. But you made a comment on our at a drink we had the other day. You just said I think it was something along the lines of like, you can think more freely once you've hit financial freedom. What do you mean by that?
Actually, there's less pressure, right? There's less pressure and you get the option to work and do things that you want to do with people you want to do it with. I think a lot of times people are in situations where they have to do something. Yeah. Which, it is what it is. But once you have that financial freedom, you get to choose who you do business with. And I think being able to choose who you do business with and where you do business helps you be a lot more successful.
What is something that you see a lot of young folks get wrong early in their career journey, or like a mindset that they should be shifting on to kind of maybe open more doors for them as they're growing up?
I think, and I talk to the young guys about this all the time, I think the biggest thing is just don't be fixated on money.
Yeah.
It's somewhat of a cliche, but when you're young, money doesn't really matter.
Yeah.
If you're making 10,000 more or 20,000 more, does that really matter? Yeah. In the grand scheme of things? It really doesn't.
Yeah.
And I think a lot of times, especially the younger generation, it's very focused on, am I getting the value? And they define value by money.
Yeah.
To me, it's get the experience. Just if you're in a situation where you can get experience, take as much of that experience because you'll be able to write your check in the future.
What is the best advice that you've been given along the way? Maybe from the leader of Mackinac or maybe from somebody else?
No, as the leader of Mackinac, I'll never forget. He's like, your greatest strength is knowing what you don't know. And that's something that stuck with me for a long, long time. And it takes a lot to do that because you have to be, you have to be thoughtful about it. You have to be humble and you have to be, secure about being able to ask the question.
Yeah. And
it kind of dovetails into what, for me, where it's really dovetailed into is surround yourself with people that are smarter than you.
Yeah.
Because if you're the smartest guy in the room, you're capped at where you're going. I'll tell you that much. So for me, it's always like surround yourself with people who are smarter than you and, know what you don't know.
Is there something that happened in your childhood? Maybe it was like a single event or just something that your parents did or just something that like had that not been a part of your life, you might not look at the world the way you look at it today.
I don't know if there was a single event, but it was pretty consistent in, growing up in Dubai, it was incredibly entrepreneurial because I like in certain ways, it's like the cannabis industry. Right. Everyone's there. You're building something from scratch. Yeah. You're building an industry from scratch. They were building a country from scratch. So everyone was incredibly entrepreneurial. My parents' friends. So what you saw through that was massive creativity and just determination and hard work and, consistency with that.
Yeah.
And, that's something that's just been ingrained in me from the get-go.
Yeah. Love it. All right. Last one. Is there a book or something that you've read or listened to besides this podcast that has helped you out along the way?
There are tons of books that I've bought that I intend on reading.
Yeah. You're one of those too. Lots of books.
I've read a lot of legal documents.
Yeah. You said that. Let's talk about that for a second. You wrote that back. You said, I don't read a lot of books. I read legal documents all the time. Yeah. Why? You don't have somebody that reads them for you?
I mean, absolutely. I mean, we have attorneys reading everything for us, but I'll read every legal document cover to cover.
Really?
Every word of every legal document cover to cover.
Why?
I mean, that's your leverage in any deal.
Yeah.
I mean, to me, the intersection of, what your documents say and business is where you're going to be able to be successful.
Yeah.
And I want to know every single thing because I think a lot of people don't and a lot gets missed and then you don't know it until there's a problem.
Yeah.
For me, it's being able to make sure there's things in those documents that address any and every scenario that I can think of that could go wrong, that I know we have, some sort of downside protection or we know what we're getting into.
How do you balance that, like every situation with not freaking the other party out where it's like, God dang.
Yeah, it is. I mean, it's definitely a balance
yeah.
And you have to be rational and commercial about it, but it's also being able to explain like, look, I just want to make sure we address everything up front.
Yeah.
So down the road, if there is a problem, we know how we're dealing with it.
Well, you come from a world where you've seen
absolutely
every problem that could imaginable.
And I think that's what's positioned me again, without Mackinaw and without the experiences and all these other companies and seeing what they've done well and seeing what they've done badly, there's no way, I'd be a smart investor or operator today.
Yep.
So being able to having seen all those issues helps you structure documents today. And 9 times out of 10, most people, they don't even pick up on some of the changes.
Yep. All right. What's the best way for people to know more about you or find Pamos, or how can they find you?
Pamos got the website, the e-commerce platform. Find me. I'm always available.
Yeah.
Either on Mackinac or the restaurant side or the cannabis side. But yeah, it's a really exciting time.
Yeah.
I think the next 3 to 5 years is going to be pretty incredible.
That's awesome, man. All right. We'll leave on a high note. Thank you so much again for coming and sitting down with me. This was awesome.
This was great, man. Thanks a lot.